Okay, guys, welcome back. In this video, we will be talking about the MACD indicator. As you guys can see, I have the MACD pulled up right here, and the MACD stands for Moving Average, Convergence, and Divergence. Let's go ahead and break down what each of this means, as well as what exactly we are seeing on this indicator. So, first off, we have two oscillating lines. We have a blue line and an orange line. The blue line can be associated with the movement of the stock itself, and we will refer to the blue line as the MACD line. On the other hand, we also have an orange line, and the orange line can be thought of as a signal line. So what does this mean? Well, if the blue line is above the orange line, that means that the stock or underlying asset is currently in an uptrend. Notice here, we have this uptrend that is occurring here, and we have the blue line currently above the orange line here and over here. Likewise, if the blue line is beneath the orange line, kind of like what we're seeing over here and over here, well, this means that the stock is in a downtrend if the blue line is beneath the orange line. Notice here we have a nice little downtrend corrective move, and the blue line is beneath the orange line. But how can we possibly use this to help and assist our trading? Well, that's where the convergence and divergence come into play. Convergence is when two things, of course, come together, and divergence is when two things move further away from each other. In this sense, convergence is when the blue and the orange line are becoming closer together. Notice over here, we'll see that they are converging with each other, where the blue and the orange line are slowly coming closer and closer together. When convergence occurs on the MACD, that means that the trend that is at hand is getting weaker. So if we go ahead and take a look here, we'll see that convergence is happening between the blue and the orange line. And being that the blue is on top of the orange line, that means that it's an uptrend. And since convergence is happening, that means that this uptrend is getting weaker and potentially looking to reverse or consolidate. Following convergence tends to be a MACD crossover, and that's when the blue and the orange line cross over. And essentially what's happening here is the blue line is going from above it to below the signal line, which means that it's going from an uptrend into a downtrend. Likewise, if we're going over here and we look at this crossover right here, the blue line is going from underneath to above, so it's moving from a downtrend into an uptrend. Now, this right here can be seen as a buy signal since we're moving from a downtrend into an uptrend. If we're just about to move into an uptrend, then we would look to buy and enter a position as we're expecting the movement to continue to the upside, kind of like what we're seeing go down in this section right here. Same thing for the crossover to the downside. If we're moving from an uptrend into a downtrend, then you would look to sell or short the position due to the fact that we're moving from an uptrend into a downtrend. And of course, you would not want to be holding an upside move during a downtrending move. Now, you also have this histogram right here. Now, the histogram right here is kind of just a strong visualization of the convergence and divergence that is happening. If you take a look at the histogram, you have green bars and you have red bars. The green bars just represent that we are in an uptrend, and the red bars represent that we are in a downtrend. However, as I said, they are a visualization of the divergence or convergence that is happening. Basically, what these bars are representing is the distance between the blue and the orange line. If we're seeing an increase in the histogram right here, where it's sloping upward, that means that divergence is happening. And what is divergence exactly? Divergence on the MACD means that the trend is at hand is getting stronger. So if we take a look here, we'll see we have the convergence that is occurring between the blue and the orange line, showing that the downtrend is getting ready to reverse and move to the upside. And then we get a crossover, and then it starts to diverge. And that means that that trend is starting to get stronger, meaning the upside move is now getting stronger. And this can be seen here on the chart by noticing that the slope is actually increasing to the upside. So when divergence is happening, that means that the trend is getting stronger. These lighter green bars that you're seeing over here and over here just represent that convergence is happening, meaning the distance between the blue and the orange line are getting shorter, and smaller and closer together. When convergence is happening, of course, that just means that the trend is looking to get weaker. And when it eventually crosses over, you'll see that it moves from green bars into red bars. The red bars, of course, just represent that we're in a downtrend, and they mean the same thing. If we have the dark red bars, that means that divergence is occurring and the trend is getting stronger, while the convergence is represented by the lighter shades, showing that we're actually getting weaker in that downtrend and we're looking to reverse to the upside. Now, those are just the basics of the MACD, but let me tell you guys a couple of things. Namely, the MACD is most effective during trending markets, meaning if we're in consolidation, we're not so much looking to use the MACD for buy and exit signals. Basically, what I mean by in trending markets is if we're seeing an uptrending market, kind of like what we're seeing in this section right here, then the best opportunities to buy are when the MACD is crossing over from the blue being beneath to above, and it is below the histogram. When the crossover is occurring and it is below the histogram during an uptrend, like we're seeing here, these are very strong buy signals. Notice right here, we get a buy signal to go ahead and get in. That would represent a buy signal right here, and you could ride this wave up. Likewise, over here, we're once again beneath the zero level of the histogram. And when we get those crossovers here and over here, those are buy signals to the upside. And notice you do get those nice moves. And the MACD is very useful on all time frames, but as we know about time frames and indicators, whatever time frame you are looking at, the moves are going to be proportional. So if we're looking at a 15-minute chart and we're seeing a crossover on the 15-minute MACD, that is going to be proportional to the 15-minute charts, meaning you would not expect to be looking for a move to occur, say, over 5 or 6 days, being that it is just the 15-minute chart, and you would expect it to occur over a shorter period of time, maybe 30 or 40 15-minute candle sessions, which equates to around a day or so. Notice we see this move right here, and this move, of course, takes place on August 11th at 13:45 and finishes off on August 12th at 13:45. So it's about a day of time that elapsed there. If we go ahead and change the time frame, we'll see that we can identify when to buy and sell by first identifying the trend of the market. And if we're in a downtrend, like we're seeing over here, the best times to buy are when the MACD is crossing over above the histogram, this time when the blue is above, moving below. Notice when we get that crossover right here, it was a very strong opportunity to go short, and we get a nice move to the downside. Same thing over here, we get that crossover, and then we see that move to the downside. Of course, this move has not fully developed yet, and we're still looking for it to see what happens next. If we take a look at this daily chart here on NQ, you'll notice that we're on the daily chart. We're in a downtrend, and notice what happens when the MACD crosses over above the zero line. We get that crossover on the MACD above the zero line during a downtrend, and you'll see that a very strong move follows. Once again, still in that downtrend, we get that crossover over here when the MACD is above the zero level on the histogram, and we see another nice move to the downside there. A very strong thing to note, during uptrends, like we're seeing over here, the best buying opportunities occur when we're seeing a MACD crossover beneath the zero level of the histogram, like here, very strong buying opportunity. We get that crossover on the MACD, and over here as well, we see another crossover on the MACD as well. And we see a very strong move to the upside. Same thing here, still in that uptrend, get the crossover beneath the zero level of the histogram, and we get a nice continuation upward. But once we move into a downtrend, and of course, that just means we're making a lower low, we're going to wait for the crossovers to occur this time above the histogram. And when we get that crossover, the downside crossover this time, that would be a strong opportunity to go short. So those are just a couple of things to take note of. And yes, guys, this does work on every single chart. Remember, technical analysis is applicable to all price charts. And these are just the very basics of the MACD.